Hello everyone, I am Dr. Manoj Kumar NV, working as Associate Professor in the Department of Management Sciences, Maharaja Institute of Technology, Mysore. So today we are focusing on the second unit, the subject title Banking and Financial Services, subject code 18 MBA FM 301. So today we are moving to the second chapter. The second chapter mainly focusing on commercial banking. So in this chapter we are going to learn about how the structure of commercial bank and what are all the function of commercial banker. The functions are classified into two types, primary function and secondary functions. And also we are discussing about the role of commercial banks in socio-economic development and whatever the services rendered by the commercial bankers and what are the advanced technology which is using with respect to the concept of universal banking, home banking, ATMs, internet banking, mobile banking, core banking solutions through debit cards, credit cards, smart cards and electronic payment system, MICR and check truncation system, ECS, EFT, NEFT and RTGS. So this chapter mainly focusing on the complete theoretical, where we are going to get to know what kind of the services are rendering by the commercial bankers. And as a entrepreneurs, we can able to know how the commercial banks are going to be helpful to the business and day-to-day operations for the business units. So therefore, when we look into the commercial bank, so commercial banking, a commercial bank is a type of financial institution that accept the deposit and offer lending account services. So as we know that any banker, they have a primary function where they are going to accept the deposit and they are providing a loans. So and make various types of loans and offer basic financial products like certificate of deposits and commercial paper and savings accounts to individuals and small businesses. In fact, the commercial banks, as their name suggests, assets, they are acts as a profit seeking industries, that is they do banking business to earn the profit. So therefore, this is not like a non-profit organization. They do profits as a commercial banker and there is a specific and primary objective towards earning better profits. Then coming to the structure of commercial banks, where the structure which is noticed here, where the structure is classified into majorly two heads. One is scheduled banks and the another one is non-scheduled banks. So in the scheduled banks we are categorized that into again three types. One is public bank, private bank and foreign banks. So the public bank with the bank which is controlled and monitored by the central government or any government or regulatory bodies, that we are called it as public banks. So where the stake is controlled by the government or the particular authority, where the public bank, where we can be able to give an example where SBI and their subsidiary, like earlier we can notice that we have a State Bank of Travancore, State Bank of India. So like that we have a different subsidiary under SBI. Also we have other nationalized banks. So nationalized bank, any bank which is nationalized under the Reserve Bank of India, and when they are fulfilled the Narasimhan Committee recommendation, then they are considered to be a nationalized bank. So in that we can give an example of Canara Bank, Syndicate Bank. Those banks can able to give an example for nationalized banks. Then coming to the private banks are completely in the hands of private people, where in earlier 1949 and prior to 1991, it is very restricted to enter into the banking sector as a private player. But in 1991 onwards, there is a huge competition which is raised by the private bankers. And coming to the foreign banks, where we have a Deutsche Bank and Western Union banks, these are the banks which is needed to transfer the currency, one country currency to another country currency, and they are going to access those currencies into INR, or they are convert the INR into other currencies. So therefore, the scheduled bank, those are refers to which have been included in the second schedule of Reserve Bank of India Act 1934. Those are considered to be a scheduled banks. These scheduled banks, again, it is classified into three types. First one is public and private, and then it will be followed by foreign banks. These banks, so when we take a consideration of public banks, these banks are owned and controlled by the government. The main objective of these banks is to provide the services to the society, not to make profits, to serve the society and to make stability and increasing the interest of savings by the investors. So we can take example of State Bank of India, Punjab National Bank, Canara Bank and corporation banks. These banks are, we can able to state as examples for public banks. So public banks we can classify into, as I said, SBI and other subsidiaries, as well as we also can classify into other nationalized banks. Then coming to the second one is private banks. So private banks, these banks are owned and controlled by the private business people, corporates, private corporates. Their main objective is to earn the profit. Like you take example of in 2007, the ICICI, they are concentrating as a financial institution, they turn into the ICICI Bank, HDFC Bank, IDBI Bank. These are the banks, they are holding in the private people, and they are in the profit mode. So they are doing the banking services and providing the financial tools based on earning profits is the primary objective of private sector banks. Then coming to the foreign banks, these banks are owned and controlled by the foreign players, and their number has grown rapidly since 1991, because in 1991, as we know that when there is a Narsimhan committee which is taken place, as well as the government coming with the industrialization through industrial policy 1991, so that will make that the huge impact in the global economy, and it will be helpful to India to come out with LPG concept, where liberalization, globalization and privatization, that mechanism which is makes the country into getting more FDI and investing into other countries and channelizing their business through expansion, all these things which has happened from 1991 onwards. Then these banks are owned and controlled by the foreign people, and their numbers are rapidly grown from 1991, when the process of economic liberalization had started in India. Bank of America, American Express Bank, Standard Chartered banks are few of the examples for foreign banks. Then coming to non-scheduled banks. So non-scheduled banks are referred to those banks which are not included in the second schedule of Reserve Bank of India 1934, all the banks which is considered to be a non-scheduled banks. Then coming to focusing on the functions of commercial banker. So where the functions are classified into majorly two types. First one is primary function, and then it will be called it as secondary function. The primary functions are as follows, like the first primary function is to acceptance of deposits. So any commercial banker accept deposit from the people, from the business and other entities in the form of. So there we can notice that where we have two types of deposits, saving deposits and fixed deposits. So where in the saving deposits, whenever we do save, then we can able to deposit into the particular bank where the percentage rate of interest is comparatively lesser to the saving bank account. So as an individual, as a individual account and small enterprises, they can go for savings bank account. Then saving deposit they can do. Then the second one is time deposit. Time deposit means we can call it as even the fixed deposit. Why we use the term as time deposit here? We have a short term, medium and long term deposit. Based on the term period which we are going to be decide that whether it is short term, long term or medium term. So where the name only indicates the time deposits, the banks accept the deposits for a fixed time of period. For a fixed time of period, maybe 1 year or maybe 5 years or 10 years or 20 years. So doubling period, those will be applicable. How you are going to increase the term, that will going to maximize the amount of gain which you are going to be getting for your investment. So the rate of return will be higher when the duration will be higher. Then coming to the next one is that is current deposit. So current deposit, I think all of you know that any business people, they are going to use the current accounts where they need a short term. Whenever they are lacking with the short term requirements, they do benefit, they get the benefit of current deposits. They are going to climb more than the whatever the cash they are required, whatever the short term obligations they had. To meet that obligation, they are going to be prefer the current deposits. So these accounts are normally have a no interest or very less percentage of interest for current deposits, where these accounts do not offer any interest. As I said, it is not provide any interest for your deposit because every day you have a transaction. So therefore there is no amount which will be hold for the long term period. So therefore we can consider that where the current deposit does not include any interest. And further, most of the current accounts offer OD, overdraft, up to a pre-specified limit. So means they given a stipulated time period. So whatever the amount you climbed in the initial time, after the particular stipulated period, you must need to be pay back. Otherwise, they are going to be charged very high rate of interest on whatever the amount you are drawn in the particular account. And therefore, undertakes this obligation of paying all checks against to the deposit subject to the availability of sufficient funds in the account. Then coming to with respect to acceptance of deposit, in the time deposit, we are classifying in the nature, we can classify it into fixed deposit and recurring deposit. So fixed deposit means what? The time is fixed and it is a lump sum amount investment. So today you are investing and after 1 year, after 10 years, you are going to get the principal plus interest for the particular deposit. But the second nature of the time deposit is to recurring deposit. So recurring deposit means what? It is like a installment. So when you do the installment amount will be same. The premium amount will be same. So every year or every month or every semi-annually, you are going to pay the deposit for a stipulated period for 5 years or for 10 years or 15 years. And after the 15 years, you are going to get the lump sum of cash. So therefore, that is also helpful to the people who are in the employers who are working as employees, or who are government employees, or who are earning every day or earning per month as a salaried employees, those can able to prefer the recurring deposits. Then coming to second primary function, the second primary function is lending of loans. This is the most important function of commercial banker. It is another important activity is lending funds to customers in the form of loans and advances, cash credit and OD facilities, and also discounting of bills. So here we can notice here in the form of how they do lending. So we know the banker will facilitate different types of loans. It might be short-term loan, medium-term loan, long-term loan, and mortgage loan or securitized deposit loans. So like they are going to decide about the type of loan with respect to whatever the assets are pledged or mortgage, or if the particular person who apply for loan, what is the eligibility criteria for him to provide the loan. Once the banker is analyzed, then they are going to be facilitate the different types of and different purposeful loan for the particular customer. So therefore, the first one under the lending of loan in terms of different types of loan based on the term, short term, medium term and long term. Then coming to advances. So advances, as I said, sometimes the banker prior they are going to commit with the particular business, the banker give a acceptance and advance payments. So therefore, advances also one of the way that the banker provide lending to the customer. So therefore, they are going to be collect that once the transaction is completed. Then cash credit. So cash credit, it is a short term instrument. So whenever they need a immediate cash, then they give a cash credit. And OD facilities. So OD facilities, overdraft facilities, where overdraft means whenever they do access with the current account, they are going to be borrow whatever the balance is there, more than the balance they are going to be drawn from the current account. So therefore, who have OD account as a business people, as a corporates, they must need to be very careful. Whatever the particular duration which is given to make a repayment, they must need to do within the particular date. Otherwise, the banker is going to be charged very high rate of interest on OD accounts. So therefore, the everyday check up whatever the transaction which is happened and how much you are borrowed from the OD account and what are all the last date were there to make a clients, you must need to be known to make a fulfill with respect to OD accounts. Then also one of the function of the primary function of the banker is to discounting of bills. So you may have heard the term bills of exchange. So the bills of exchange, which is a promissory note which is promised by the debtors to the creditors. So here the creditor is a bank or the person who given a loan, and the debtor is the person who taken the loan from the particular person. So therefore, obviously the debtor always used to give a bills of exchange that is promised to pay a certain amount for the future debt. But as a creditor, if I need immediately, if I need the cash immediately, but whatever the debtor we given a promissory note, in that he mentioned after 3 months, but I need the particular amount today itself. Then what I can do is, I can produce my bills of exchange to the banker to discounting my bill. What the banker has to do in that is, he has to collect the bills of exchange, and whatever, just assume that my debtor is pay bills of exchange which have a worth of 1000 rupees and he is promised to pay after 3 months. Then I submit the same check to the banker today and I set to discount the particular bill. So what the banker will do is, banker is going to be collect the commission or whatever the processing charges which is incurred. He make that whatever the is charges, is going to be remit from that, and the remaining value 95 or 90 rupees is going to be transferred to my account, or he is going to pay the cash to us. So therefore, whenever we need an immediate cash urgency, then also we can make use of whatever the checks we are received, we can submit to the banker and we collect the cash, and the banker is going to be get the responsibility towards collecting the cash from the debtors. So therefore, all these facilities which is most important for commercial bankers to focusing on that. So loans are advances that the bank extends to its customers with or without security for a specified time. So sometimes if you are the banker, they ask for the proof, they ask for the securities, they ask for the property documents to produce the loan. Sometimes they may not, and an agreed rate of interest. So therefore, the rate is specified. So whatever the rate they specify, the customer must need to be bear the interest for whatever the amount of loan he is getting from the banker. Further, the bank credits the loan amount in the customer account while he withdraws as per his needs. So therefore, there is no need that whatever the sanction amount by the banker, entire amount you must need to be take it and need to be make use of it. You can take whatever the need for your loan. So you can take the part of whatever the amount which is required for meeting the particular need. And under the cash credit facility, the banker offer its customer to facility to borrow cash up to a certain limit against the security of goods. So therefore, whenever we pledge, whenever we do give a securities, at the time immediate cash is going to be given from the banker, and further an overdraft is an arrangement that a banker offer to customers wherein the temporary, it's a temporary facility offered to overdraw from the current account without any security. So therefore, you can make use of the OD facility whenever you need a immediate urgency towards make a current payments. So the limit is pre-specified. So therefore, you have a restriction because you can't able to borrow more than the whatever the limit which is prescribed, because it is going to be decided once again based on your income level, based on your earnings. So additionally bank also discount and repurchase the bills. So in both these cases, the bank credits the amount of the bill in the customer's customer's account after deducting the discounts and commissions. So I already said they are going to be charged whatever the processing charges is there, discount charges is there, they are going to be remitted to them, and the remaining amount only it is going to be deposited to the bankers to the customer's account. So this account is recovered from the debtors on the maturity of the instrument. As I said, bills of exchange have a maturity period. Within that maturity, so at the maturity period, the banker is going to be collect the cash from the debtors. Then we are moving to the secondary functions of commercial banks. So the secondary function of the commercial banks are as follows. The first one is the commercial banks acts as an agent. So why we do call it as an agent? So here we can look into the services which are provided by the banker as an agent. Okay. So where we can notice that in this the first services which we can take is collecting bills. So means as I said, discounting of bills. So therefore in the discounting of bills, once as a creditor, I produce the promissory note or bill of bills to the banker and collected the discounted amount. Later on, the banker is going to be meet the debtors and he is going to collect the cash from them. So therefore, whenever we need an immediate urgency, we directly get the cash. But the task of collecting the amount from the debtors it will be a responsibility of the banker. So therefore, even though it will be reduce the risk, because as a creditor, if we go and approach to the debtors, there will be a chance of bad debts. Because we are not have a much guarantee that each and everybody will going to give amount, entire amount, whatever we are given. So therefore, that responsibility will be reduced to the company by making a discount of bills. Then one more thing is draft. So draft checks, so sometimes the banker is going to be given a check assurance to the customer that even though the particular customer is not liable to pay, then the banker is agreed to pay the responsibility. So therefore, they are playing as a agent. Then any check which you are going to produce, even though it is bounce, you can put the sue against to the particular party who are given a check to you, whether they have insufficient balance or whether they are not have access with the particular account. If they give an outdated check and all, we can able to put the sue. So therefore, the banker perform as an agent here to fulfill the particular transactions. And paying in insurance premium, if you given a standing instructions to the banker, then whatever the policies you have, it will be directly remitted to the banker, because unless you are recall that you are going to pay the premium. If you are failed to pay the premium, sometimes the particular scheme may cancel. So instead of that, if you given a standing instruction to the banker, obviously whatever the insurance premium you have, that will be remitted directly from your bank accounts. And also in case of rent, in case of any loan installment, all these such payments you can able to do based on whatever the banking transaction. In that only, if you give a standing instructions, then they are going to be do the particular transactions. Then working as a representative of a customer for purchasing or redeem the securities in the security stock exchange or security market, where whenever we do the transaction, we do investment in the shares, we do investment in the security market, then whenever we do purchasing and whenever we are going to pay, whenever we sell, purchase and all, it will be directly transacted through the banks. So therefore, each transaction is going to be encountered in the whatever the passbook entries and banking transaction, they are going to be concentrated as a agent. And acting as an executor or trustee of the estate of a customer. So therefore, as we know, in case anything which is happened, then the banker is taken a consideration to whom to transfer the amount, whether to nominee or whether to the concerned person, whether it is a joint account. All these jobs which are going to be fulfilled or take place by the bankers. Also they are also preparing the income tax returns, claiming tax refunds, etc. So therefore, through the bank account itself, you can able to get to know what is the total income and what will be the possible payments which is going to be deduct from your claiming of income tax deductions. That also the banker is going to be notified that whatever all the deduction you can claim, what are all the total income which is generated, all this information you can able to access through bank account. Then coming to the general utility services. So the general utility services also rendered by the commercial bankers, where we can they are going to be issue the traveler check. Traveler check, it is going to be one of the mode that you can able to use that for the traveling whenever you do travel outside the countries or within the limit of the judicial restriction, where you can able to make use of traveler checks. So traveler check which will be helpful, like instead of you are carrying a cash, you can able to carry your particular check, traveling check. So therefore, you can make use of the particular check for traveling anywhere where they are going to be accept the traveler checks. So whatever the amount of deposit you do, you can able to access the particular amount of check as a traveler checks. Then the next one is offering a locker facilities. As we know that there is no guarantee, there is no responsibility held by the bankers, but they are going to be provide the lockers to make safe of whatever the jewelries or property, bonds, papers or land property papers you have. You can kept it in the locker instead of you keep it in the home as unsafely. You can able to put all those things in the bank locker. Then they are not going to provide any security for that. So therefore it is just make you to keep safe of your documents through your whatever the locker facility which is rendered by the banker. So it is like a safe custodial for your valuables. Then the last one is, it is also concentrating on issuing debit cards and credit cards. So today without those cards or without mobile banking services, so nobody can do any operation, any transactions. Like you may know that even in the rural area where if they ask for what the barcode, everybody they are going to be use the internet banking, or they are use the mobile banking in terms of Google Pay and Phone Pay they are going to be used. And earlier in recent 10 years back, it is a more prominence which is given for issuing a debit cards and credit cards. But today, as today's trends, we are mainly depending on all mobile apps and whatever the application which is given from the banker as an app which we are going to make use of transferring the money and making a payment, making a insurance or paying a insurance premium. Everything we are going to be accessed through mobile banking and internet banking. So therefore today we are mainly concentrating on all these aspects of whatever the major functions of the commercial banker and how these functions are most important from the banker side, and even how it is going to be fulfill the needs of the customers. And also we are looking to how the structure of commercial banks and who are the major players in that, and what will be the category of the commercial bankers, and how they are going to be have a major task as a public banks, as a private banks and commercial banks, and how they do operations. So that we are going to be discussed today. So hope everybody you are understand how should be the structure of commercial banks and how they are going to be play a major role in the commercial banks or banking sector towards fulfill whatever the customer needs. So therefore as a banker and as an investor, you must need to be aware of all these services as the individual functions of the commercial bankers, and you should need to know why this structure is most important and why they given more importance for public sector and private sector, and how the policies are become liberal towards make influence for getting more FDI to India through LPG concept. So these are the major things which you are going to be noticed and need to be understand well, that how the emerging trend which is happened in India with respect to the banking sector. So as we know today, the majority of the bankers are performing as a commercial bankers, and they have even though it's in the COVID situation, the banking sector is performing very well, and even the banking and pharma, except these two, the other sectors are having huge losses, but these two sectors are having a very good improvement and enhancement in the profitability. So therefore there will be a more employment opportunities if you are thorough in all the basic conceptual things with respect to the banks, and you must need to be advanced with respect to technological usage. So if you know very well, if you thorough in the technology, surely there will be a huge number of job creation which is going to be take place in upcoming days. So hope everybody you are understand. Thanks for listening. Thank you.